Excellent, excellent. Yeah. Bear with me, guys. I think someone's just messaging me to see if they can join. Bear with me, guys. Okay, they're going to jump onto the afternoon session, so that's fine. Bear with me. Let me share my screen. Can you guys confirm you can see my screen? Okay, brilliant, brilliant. So, welcome back, everyone. Welcome back. So, today we will do a quick refresh on the bullish G boxes, and I'm going to recap some of the theory behind it, especially the notes that we took down yesterday, and I'll also reconfirm that on the chart. As I said to you, I expect you guys to be slightly confused. Most people do get slightly confused after the first lesson, so don't be anxious to ask any questions. Let me do the refresher first, because that should iron out some of the questions already. And obviously, you're going to get plenty of opportunity to ask questions later anyway. And then once we've done the bullish boxes, we will then move on to the bearish boxes and then look at the setups on the bearish boxes. And then we'll finish up today by completing the bearish boxes. And then tomorrow we will combine the bullish and bearish boxes together and show you how we can switch between two in a trading day, and then how we can also use them not just for signals, but to manage reversals with milking. And then we'll finish up with prop firm, how to trade prop firms, tips and tricks, and then that's it. Tomorrow's the last session until next week, where we will do the Q&A for this. Now, one of the things that I wanted to clarify with you guys before we start the refresher, well, part of the refresher anyway, is somebody was asking, did you just draw the bullish boxes because price was going up? And do you only draw bearish boxes when price goes down? No, absolutely not. It doesn't matter which way the market is going, you need to draw both sets of the boxes. Because if the market is going down, you should still draw the bullish boxes, because the bullish boxes will help you identify the bounces or when it's turning. And you don't know which way the market's going to go. It might suddenly switch up and go up. So you need to be always prepped and have the bullish boxes drawn. Same with bearish boxes. If the market is going up only, you should still draw the bearish boxes, because market may suddenly take a turn and the bearish boxes are going to help you navigate that turn. So regardless of which way the market is going, bullish and bearish boxes are crucial. Now, the G value that I helped you generate using the formula, we always use the previous day's data to generate the G value, and then we use this G value to draw a box for the next day. And then this next day's box, we can drag it across to the new day and use it. And then we can also add the current day's box using the previous G value again. And then we will have previous and current day's box combined together. Okay. And situations like this, where you can just use the previous day's box alone. Here, can you see this box here is actually come from this day here, and I've moved it across and I'm using it alone until I draw a box for this day. And here, this isn't the previous day's box, this is current day's box that I use this G value to draw, and I'm using it alone. And then here, I have the previous day's box moved across and the current day's box combined together. So if you look at your notes, there was 3 options of how to draw the boxes. Option 1 was this one here, which is current day's box drawn using the previous day's G value. Option 2 was this one here, where I moved the previous day's box to the current day and I used it alone without this blue box, just the red box on this day moved across from the previous day. And then option 3 was when I combined the previous day's box, which is moved across here, and I added the current day's blue box and I used them together. And option 3 is the true way of drawing the boxes. What do I mean by true way of drawing the boxes? What I mean by that is option 1 and 2 are still valid, but there's more chances of SLs because the gaps are bigger, so there's bigger TPs. So don't get me wrong, bigger TPs, which means there's more chances of SLs as well, but still very strong, still very accurate. Because even if there's more chances of SLs, don't forget that SLs are calibrated so you can get the recovery. But option 3, the beauty of option 3, less SLs. So where you would have get an SL on option 1 and 2, by using both the combined boxes together, there's chances that the SL is avoided because the gap gets closed earlier. So you may get less signals, less TPs, but in return, less SLs. And there's a good example on this day here. So if I just, let me show you, if I just actually delete this day's box, and I'll draw that again. So let's delete this day's box. And bear with me, everyone. I'm just going to move this line here so we can use it again later. And delete this and delete this. So now, I'll give you a good example here. You see this blue box here? This blue box on this day has actually come from the previous day. It's from this day here. Okay, so this blue box has come from this day here. So it's a previous day's box moved across. And I also want to delete this last box because I want to cover something else. Bear with me. Oops, sorry guys, I've messed that one up. Bear with me. Let me just copy that box. Okay, and let me delete this box. Okay, so now, this is a good example. Oops. So now, let me zoom in a bit. So I hope you guys see. Okay, so now, let me move this, bear with me. So now, if you look at this day here, ignore the red box. This red box has come from this previous day. Just look at the blue box. The blue box is for this day here. And that's the low of the day. So remember, initially the low was here, but as the market went here, that was the lowest of the day. So that's the final box. So we drew the box from the low using this G value, and we stacked the boxes up. And to save time the following day, because I may not get a chance to draw boxes, I moved it across. And that's the previous day's box from here, moved across. Now on this day, if I don't have a chance to draw any boxes, I'm going to use this box only from the previous day, which is option 2, using previous day's box on the current day. As the price moves down, I've got no boxes here, and I want to use the previous day's box only. So this is the only time, you see this box here, this is the low of the day. And I cannot adjust this low to this low here because I'm not drawing current day's box. I'm only using previous day's box. And previous day's box already has a low, so you can't change that. That's the only time where you copy the same size box and you place it down. Normally, bullish box, you only stack up. But this is the only time you stack it down when you want to move it across to the following day because the price has come down. That's the only time, okay? So that's a reminder for you guys for that. So let me do that. And here I have that done. And now, on this day here, I'm using only the previous day's box, as you can see. I've not drawn the current day's box, so I'm doing option 2. Now, this is a good example of showing how you can take SLs with option 2 and still get recovery, so don't get me wrong, but having the current day's box can save you from the SLs, and this is a good example to show you. I did this yesterday, but doing a recap really helps get the information across. So if you look, the market immediately opens above the half line. So when it opens above the half line, there's a gap to the next line, and it goes and hits it. Lovely. Now we have a body close above this full line, and it leaves a gap to the next line, but it reverses. So we enter on the next candle, and it reverses, and we hit SL, right, oops, let me enter on the entry candle, which is opening here, and reverses, and we hit SL, 150 pips, bang on this level here. So we hit the SL, we jump in on the SL, and it gives you the recovery. Nicely done. After the recovery, we get another body close above this line, and it leaves a gap to the next line. We enter, reverses, and we hit SL here again. Hit the SL, enter the calibrated layer, get a reversal of 60 pips, goes back up and gives you your 50 pip recovery. So we have had 3 signals. Out of 3 signals, we have 1 TP, 2 SLs, but both the SLs got recovered. So both SLs got recovered, so no issue, still 100% hit rate, no losses, you're covered. But you went through a bit of anxiety because you had to enter 2 trades that hit SL and you had to recover them. So although you recovered it, there was a bit of stress, there was a bit of anxiety. Now, imagine you didn't do option 2 and just use previous day's boxes. Imagine you also did current day's boxes. So current day's boxes you would have drawn using first on the first candle. So let's get a box. So let's get a red box. And just place it anywhere for the time being. And let's get the low of the first candle first. So the low is 2619.78. So I'll put that in there. 2619.78. Put that in my calculator. 2619.78 and plus, because I'm going up, bullish boxes, plus the G value. So the previous day's G value 1477. 1477 gives me a value of 2634.55, which I'm going to put on the top part here. 2634.55. 2634.55. Press OK. And I've got my first box here. Okay. I now need the half line. So half line, we add the top and the bottom of the box and divide by 2 will give me the half line. So let's get the half line. 2619.78 plus 2634.55 gives me this, divide by 2, gives me a half line value of 2627, 16.5, round it up, 2627.17. So 2627.17. So now let me get a half line, which is here. And I'll place it anywhere here. And properties, and now I'll get this figure, 2627.17. 2627.17. Put that in the top figure as well because it's one line, not a box. Press OK, and I've got my half line. Now, look, we have the first signal still the same, body close above the line, gap to the next line, goes and hits it. And now this body close has not left a gap to the next line because this half line has closed the gap. And because this half line has closed the gap, there's no signal. Before we had this box, we only had the previous day's box. And the previous day's box had a body close with a gap to this line here, which reversed and hit SL. But because now I added the current day's box, the signal is not valid because the gap is closed. You see how amazingly this option 3, combining both the boxes together, has avoided this SL. Now, I want you to also see something here. If I didn't have this box and I took this trade like I showed you earlier, it gave us an SL recovery. But look what happens the following day. It actually goes and hits it. And you would have noticed even on my channel, 90% of our signals that ever hit SL actually go and hit TP within the week. So even though we take the SL, and a lot of people say to me, Mr. Gold, your signals always hit TP later. So why don't you just hold on to them and hold it rather than taking an SL? And I want to share this with you, the reason behind it. Historically, 7-8 years ago, because I know my signals eventually go and hit TP, I would not take the SL. I would keep holding the trades. And I realized when you get onto the habit of keep holding trades, you can end up having an account that always has open positions with lots of drawdown. And then it impacts you taking a salary or a wage from the account because you keep having running positions. And sometimes they can be stuck for ages. So by getting into the habit of always being out of the positions, it gives me that true freedom of knowing my account has no drawdown and I can pay myself religiously every month. So that's why, regardless of if it's going to go and hit TP or not, I get out of the position either via my TP or either by my SL management. Okay, so that's the reason behind it. So anyway, here, as you can see, the option has allowed us to avoid this SL. Now, let's see if we can avoid the next SL. So before we do that, we have a new low here. So we would have adjusted the box. So let's adjust the box to the new low and adjust the half line. And then again, nothing happening here because it's a red candle, and then we get a new low again. So I adjust again, and I adjust again, and then I have 1, 2 candle, and then I get another new low. So nothing else happening here. So I'll move that to the new low. And now after I've done that, now on this new low, I have no new low now. So until I get body close above this level, gap to the next level, and this one still reverses, but I get my 150 pip bounce. So we still get one SL, but we get the recovery, and we avoided this SL here. So perfect. And then now, it's not finished yet because we've got more new lows. So let's adjust to the final low, which was here. And after that, no more lows, so therefore no more adjustments. And now I can stack the boxes up to complete, and I can use this day as well now as an option 2, previous day's box moved across. So bear with me, just do that first. And unselect all. So now this day is done. And now on this day here, I've already moved the box across. So this is the previous day's box, and I've not drawn the current day's box. So I'm just going to use the previous day's box. Immediately when the market opens, we have a body close above the half line, gap to the next line, goes and hits it. Beautiful. Then we have a rejection, bounce, go back up, body close above this line, plus EMA 5 cross and lock, stronger signal, gap to the next line, reverses for a bit, goes back up, hits it perfectly. Now, again, no body close, rejection, goes back up, and that's it, day closed. So, nicely done, okay? So that is a good example of a refresher on the bullish boxes and just reconfirming those important points of option 1, 2, and 3. So just before we move on to the bearish box, and please note, when we do the bearish box, that will also act as another refresher, because bearish box is exactly the same rules as the bullish box, but I just do it in reverse. So when we do the bearish box, it's going to serve as another refresher because it's exactly the same. We just do it in reverse. So just before, and what we'll do when we do the bearish box, we'll do it on the same dates. We'll do it on the same dates on another chart, and that way we can shift between each day tomorrow and show you how we can manage the charts on a typical day. So before I move on to the bearish box, any questions? Oops, I forgot to post something as well. I'll wait for your questions if there is, and if there isn't a question, please tell me to carry on so I can move on. So everybody okay for me? Can you please repeat the signals for the 31st? 31st is this one here. Bear with me. So we market opens immediately above the half line, leaving a gap to the next line. Enter here, goes and hits TP. Then after several hours, 5 hours, we have another body close above this line, gap to the next line, and we also have an EMA5 cross, lock, enter, gap to the next line. Reverses for a few pips, goes back up, completes the gap, completes the signal. And then here, there's no further body close, so no further signals. Is that okay, Frank? Okay, so if everyone's okay, we will move on to bearish boxes. So bear with me, let me get the dates. So these dates were in December. And literally, I was just talking to Mrs. Gold about this yesterday. She was telling me, well, how did the lesson go? And I told her it carried on over the 2 hours. She's like, oh, normally you finish within, how comes? I said, oh, because the data that we stumbled across had a couple of SLs, so more moving around and more lows that needed readjusting. Sometimes the data that we choose is only going one way, so there's not much readjusting. The boxes are drawn nice and easy. But here, as you can see, it's bullish boxes, but lots of movement down, so lots of readjusting. Bearish boxes will be easier. So I was just telling Mrs. Golan, she said, oh, it's quite amazing that every lesson, level 1 and 2 that you've ever done over the last 5 years, you never prepare the data earlier. You just scroll and choose a set of data, and that's why you don't know what to expect. And I was telling her, look, I always say this to my students is, it gives me confidence to be able to do that, because then I know how powerful my setup is. No matter where I throw the data, I can manage it. And number 2, it also helps me enjoy the lesson, because then I'm not bored. Because can you imagine if I was doing the same data every time with the students every month? It would be very, very boring for me. So when I just scroll data and pick any set of data, it's exciting for me as well, because I don't know what to expect. So we've done the bullish boxes. Let's now switch to another chart and let's look for bearish boxes for that data. So it was December, right? So let's have a look. That's not the same December. It's all right. Here we go. Is it here? Let's have a look. Let's see if we've got the correct month. So this was 23rd of December. Let's see. Did we actually do it here? No, this is a different December, isn't it? Yeah. So then let me go and we can go scroll back from here and now look for it. Okay, it could be this. Yep, that's it. Okay. So let's just double check just to make sure. That was a bit of up, down. Let's see if it's the same one. Yeah, that's it. Okay. So let's get the G values done first. So we have 2263. So 2263. And then the next one is 1407. Trick question. Are the G value the same for bullish and bearish boxes, or are they different for the same days? Good, good. Some people wonder, oh, is it different? No, because the G value is generated the same way. So therefore, for the same day, the G value will be same, regardless of bullish or bearish. Okay. Well done, guys. So, 713. 713. One three five three. 1353. And then we have last one, 1477. 1477. And I like to change the color for bearish boxes to red. So and one other important thing that I do, and is very, very important, is I also put a title on both. I put here, bearish G boxes. And I will also, on the other one, I'll put down bullish. Oops, sorry about that. Bullish G boxes. And change the color. And the reason why I put the title on there is this has happened before, guys, many times to me, and many times 5 years ago to my previous fund traders. If you don't put the title, sometimes accidentally you look at the wrong boxes for the wrong signals. What I mean by that is some people, if they haven't put the title, they get mixed up with which one is bullish boxes and which one is bearish boxes, and they end up taking a sell signal on the bullish box or a buy signal on the bearish box, which is incorrect. So by having the title on there, you're always looking for the right signals on the right chart. And never, ever mix up bullish boxes with bearish boxes on the same chart, because you will confuse the hell out of buy and sell signals. You have to have bullish boxes on a separate chart and bearish boxes on a separate chart. Okay, so now I'll go back to my bearish boxes, and now let's draw the first bearish box. So this is the trading day, and I'm going to use this G value here. So I get myself a box first, and I'll just randomly place it anywhere, and to save time the following day, remember, I'll move it across. And now the first candle is here. So remember the rules of the bearish box. Bullish boxes, we start from the low and stack up. Bearish box, you do the opposite. Start from the high and stack down. So if I hover on this candle and I get the high value, it's 2624.77. Get my calculator. 2624.77. So I'll get my box, rectangle properties, and this time on the top box, not on the bottom box, I'll put that value. which was 2624.77. 2624.77. And now on the calculator, I'll do minus. When it was the G boxes on the bullish boxes, we did the value plus the G value. But on the bearish box, because we're going down, not up, it's not plus, it's minus the G value, 2263. 2263. Now it gives me a figure of 2602.14. 2602.14. Press OK. And I have my first box here. And now I need a half line. So I'll get myself a half line, place it anywhere here like this, and I'll add these two figures together. So 2602.14 plus 2624.77 equals this, divide by 2, gives me 2613.46. 2613.46. 2613.46. And place that on the top as well. And I got my half line now. Now, immediately when we have the market open, we have a body close below the full line, gap to the next line. Now, although we have a new line, new high, you would update the box later, but the gap has already activated when you were here. After this body closed, the gap has already been activated, and so you would have entered, and regardless of if the box gets adjusted later, look how it goes and hits TP. Absolutely phenomenal. And that is a lovely, lovely signal on entry candle to here is 110 pips. Beautiful signal, and look amazingly it goes and respects the level and then rejects up. Lovely. Now we had a new high, so we would have update again, and then again a new high here, update again, and after here no more adjustments needed because there's no new high. So after here, no more adjustment needed, but I need to stack the boxes down because I don't know if it's going to continue to go down, and there is a little bit movement down here as well. So how do I stack the movement boxes down? Because it's bearish boxes stacked down. I place another box, move it across, and this time I get the low value of this box and I can put it on the top of this box so you can align up here. So the low value of this box is here. So take that and I'll put that on the top value of this box. Okay, and now I do that again. 2, 6, 10, 50 minus the G value 2263. 2263 gives me 2587.87. So 2587.87. So 2587.87, and I need that top value, which was 2610.50. 2610.50, 2610.50, press OK. And I've got that placed nicely there. And I'll just copy the half line as well. And that's me done. Okay. So now, on that day where I've only got the current day's box only, so you can see here is only the current day's box. We continued, we had another body close below this line. So first you had that one where earlier I showed. After you updated the box to the new high, now you have a body close below this line, gap to the next line. Enter on the next candle and TP to the next line, 88 pips, absolutely beautiful. Perfectly goes and hits it. Can you see? So now that's 2 signals done. Now, after the second signal done, we now have a body close below this line, and it leaves a gap to the next line. So another signal, but it reverses. Reverses, reverse, 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 reverse. Goes back down, 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 down. Reverse, 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 reverse. 150 pip bang on here. Enter for the 150 pip SL recovery. Down, 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 down. 57 pips given. So recovery done. And then we'll continue with the new box now. So now on this day here, imagine I start with just the previous day's box. So I haven't drawn the current day's box yet. And I'm going to do option 2 right now and option 3 to draw it both together. But first, let's just do option 2. So option 2 here is moving this previous day's box to the current day, which you can see here. And now we start. Immediately when we start, this is a bearish box. So we have a candle below this half line and it leaves a gap to this line here. Price goes up, then down, perfectly hits that level here, completes the signal, and then goes back up. There's no further signals, no further action. So now let's add the current day's box and see if there's anything else going on here. Let me zoom in for a bit. And now let's draw the current day's box. So let's get another box. And this time a blue box. Move it across to save time. Change the color. Should you draw the bullish boxes and bearish boxes on separate chart? But no, I just answered this a few minutes ago. You have to draw the bearish box and bullish box separate charts. It is the most absolutely crazy thing to combine, do them together, because no way in hell will you identify bearish and bullish signals if they're mixed together. It's just going to be absolutely crazy. You're going to have boxes this way, that way, and you are not going to know which one is bullish box, which one is bearish box. It's absolutely impossible. You just cannot do it. You have to have bearish and bullish boxes on separate charts. Okay? So now keep the questions for later, please. Otherwise, I'm going to lose the flow of the lesson. So now let's do the current day. So straight away, we will do that with the first candle of the day. So let me get the first candle high because it's bearish box, 261709. 261709 parameters, 2617.09. And I'll get that on the calculator. 261709 minus the G value 1407. 1407 gives me 2603.02. 2603.02. Press OK. And I've got my first box there. And now let's get a half line. Oops, delete that. Let's get a half line. And let's make that blue. So immediately when the market opens, same again, nothing going on, just this gap here, which gets done perfectly. And then we start getting the new high. So this box needs to be adjusted. So adjust to the new high. This is the high, and after that, no more highs, so no more adjustment needed. And if I want, just because I don't know if the market's going to go further down, I just stack the box down just in case. And sometimes we have to stack 4, 5, 6 boxes down. Or if it's on the bullish box, sometimes I'm having to stack 5 boxes up, depending how fast the market is moving. You guys have been lucky, you're only seeing 2 boxes drawn. Certain ranges, 3 boxes drawn. You just can't tell how many boxes. There's been times where we've had to do 4 boxes. So it all depends. You know, you might have a day where the market is aggressively moving like this, and the previous day's G value is small. So you have 1, 2, 3, 4, 5 boxes. You just can't tell. You just have to draw until you realize. Okay. So now on this day here, I've done the box update and there's no further highs, so no more update needed. I see price go down and we have a candle body close below the current day's half line, which is this blue dash line here, leaving a gap to the previous day's full line. So remember, when you combine both boxes together, you use both the lines. So we have a body close below the half line of current day, gap to the previous day's full line. And look how amazing. Enter and goes and hits TP. Absolutely beautiful. And you see that? TP hit, No further body close, just wick rejection, and then it reverses back up. No further signals. So beautiful with the current day's box, you managed to get an extra signal. Before we had the current day's box, we only had the previous day's box. There was no extra signal, now we get an extra signal. So now, on this day here, I have moved the previous day's box across. And imagine I'm being lazy and I don't have time to do option 1 to draw current day's box. I'm only going to use the previous day's box. Immediately when the market opens, price is going up. I haven't got enough bearish boxes from the previous day to cover here because the previous day's high is all the way up here. It's not up here to cover these boxes. So I can't readjust the previous day's box because the high is here. Do you remember when that happened with the bullish box? It was the only time where I said on the bullish box we have to stack down. Same rule on the bearish box. Bearish box we only stack down. But this is the only time you will stack up a bearish box to cover the following day's data if you don't draw the current day's box. So this is the only time I will stack up a bearish box. So do you remember, guys, that happened with the bullish box and we stacked down instead of up? And this is a bearish box that we stacked down, but this is the only time where we will stack up because the following day the price has gone up. And that's why we need to stack up to cover that data. And I've done that. So now on this day, again, there's more candle up here. So I'm going to stack up again. And this is still bearish box, remember? But I'm just stacking up because I'm not drawing the current day's box. And I need to cover all the candles using the previous day's data, which is this previous day's box. And I haven't adjusted the box because the box started, look, on the previous day's high. Because bearish boxes start from the high, stack down. But because we're using the box on the following day, I'm still using the same size box and I'm just stacking it up immediately above the box. So now on this day, I have the previous day's bearish boxes ready to trade because I haven't got time to draw the current day's boxes yet. So now let's see what happens. Immediately when the market opens, we have a gap that's left to this half line here, which does get filled. Can you see on this following day, it goes and gets filled. But imagine you take it as a trade and you press sell, but it reverses up, 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 and you hit a stop loss here. 150 pip stop loss here. You enter for the recovery, for the sell, and 50 pip recovery given. Can you see how amazingly you've gone for the sell, it reverses, and just where the 150 pip ends for the SL, you get 2 candles for the recovery sell. This is why I love, absolutely love these market maker formulas. Perfect time for the rejection, perfect time for the recovery. Anyway, market continues up, 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 comes back down, and now we have a body close below this line, leaving a gap to the next line here. Enter, just misses the TP, goes back up, comes back down, within SL, no SL, hits the TP on the following day. Perfectly done. Same again, goes back up, comes back down, another body close below this line, gap to the half line, boom, perfectly goes and hits the TP. So we have had 1, 2, 3 signals, 1 SL with recovery, 2 signals with TP. Absolutely beautiful. Now, let me draw the current day's box here and see if there's any changes to this dynamic. So let me get myself a red box, move it across on this day, and let's start with the first candle first. Get the high, which is 2620.17. 2620.17. 2620.17. minus the G value, 713, small G value. So let's see what happens. 2613.04, 2613.04, press OK. I get my first box, and I also need a half line. So let's get the half line, and let's get it. Oops, I've made a mockery. Here we go. Here's the half line. Okay. Okay, nothing going on. So now we need another high. So I move again. Nothing going on. And then this is another high. And now here, let's see what happens on this high. We have a body close below the half line, gap to this full line, and look. Earlier, this TP was missed, didn't hit SL, but gave the TP the following day. Now, by drawing the current day's box, option 3, it's given us the TP on the same day. Can you see? This is the beauty of having option 3. It gives easier, quicker TPs. So we've got a TP here. Nicely done. And then we have a new high here. And after that, no more adjustments needed. But we need to stack the boxes down because there's lots of candles below it. So let's stack the boxes down. And as I stack it down, I'll do the half line as well. Bear with me. I'm going to need and more. And last one. And unselect all, so I'll move it. And now let's see what happens on this day from this high. After this high, we have a body close but no gap, body close but no gap, goes back up, down, body close, gap to this full line, goes and hits it the following day, and that's it. No further action needed. Now, on this day here, a new day, I'm going to use the previous day's box, move the cross to this day, and I'm not going to draw the current day's boxes yet. I'm just going to do option 2, which is previous day's box, move the cross to the current day. And let's see what happens. Immediately when the market opens, we have a very tiny gap here, so it's not worth even thinking about taking. But then the following candle, we have a body close below this full line here, gap to the half line, enter on the next candle, reverses for a bit, comes back down and hits TP. Then we have a body close below the half line, leaves a gap to the full line, enter on the next candle, goes and hits TP. Then we have a body close below the full line, leaving a gap to the half line, reverses for a bit, comes back down, creates another body close here with a gap to this line here. So 2 signals still active, no SL, one with a gap here, one with a gap here. This one goes and gets hit first, and then the following one hits this one as well. So both TPs done together. Then we have a body close below this line, small gap to the next line, goes and hits it. This body close leaves no further gaps, so no further signals, and then price goes up, down, up, day is ended. Okay? Oops, let me just, I've not drawn the books fully. Bear with me. Let me delete these boxes again. I didn't move it across fully on this day. Okay. Oops. Let me see if I can change the time. Oops. Okay. $28. 28. 28. 28. And then stack down. Okay, yeah, so no further signals. Day done, finished. Now, let's draw the current day's box here and see if anything happens. These signals were all nicely activated. We had 1 signal, 2 signal, 3 signal, 4 signal, 5 signal, 5 signals hit TP, nicely done. Let's draw the current day's box here. So let me get myself a blue box. Move it across. Let's start with the first candle here. High is 2634.65. 2634.65, 2634.55. Get my calculator. 2634.55 minus the G value, which is this one, 1353. 1353 gives me 262102. 262102. 2621.02. Press OK. Now I've got my first box. Let me get myself a half line. And now, same again, nothing happening, still the same signal, TP here, goes and hits it, nothing happening. And now I adjust the box to the new high. And then after that, no more adjustment needed for the day. Oops. Sorry guys, I've moved that box accidentally. Bear with me. Let me get that half line here. Okay, so now, oops, let me move this half line here. Let me stack down. It can be a bit finicky when I do it like this. And stack it again down. And get the half line. And then I'll unselect all so I don't move it. Unselect all, right click, unselect all, no more movement. So now on this day here, I have option 3, previous and current days combined together. Let's see if there's any changes. Okay, so no more signal here because it's sorry, this is the new high. So already we had that signal. Now we updated with the new high. After updating any new signal, we have a body close below this line now. Gap to the next line, goes and hits it. Body close below this line, gap to this one, goes and hits it. Body close below this line, gap to the half line, goes and hits it. Body close below this line, gap, very small one to this line, goes and hits it. Not worth taking, but still a gap, and no further gaps. So that's this day ended. Now, to finish up on this box, this following day here. On this following day, I will now use the previous day's box, move the cross, which is option 2. You can see here the blue box has come from the previous day, and I'm going to use it on this day to see if there's anything that I can do. Immediately we have a body close, red candle below this full line, leaves a gap to the next line. Perfectly goes and hits it. Nice big gap, nice big signal, nicely done. Then we have a body close below the half line, gap to the full line, again beautifully goes and hits it. And now again, we have a body close below the full line, gap to the next half line, reverses for a bit, comes back down, beautiful TP here. And now again, we have a body close below this half line, gap to the next line, beautiful, perfectly goes and hits it. 1, 2, 3, 4 signal activated, 4 signal TP hit. No further candle body close. We have a wick rejection, price goes back up. Beautiful. Just on option 2. Now let's do option 3 on this with combining the current day's box, and let's see if we get any action. So I'm going to do it with this high because it's only a few candles later, so we don't have to adjust the box again. So let's get the high, 2627.97. So let me get myself a red box, move it across anywhere here. Bear with me, and move it across. And let's get the high, which was here, 2627.97. 2627.97. Get myself the calculator, 2627.97 minus the G value, 1477. 1477 gives me 2613.20. 2613.20, press OK. I get my box, and now I need a half line. And I'll stack down. And stack down. And now let's see what happens. Okay, same again. Gaps become a bit smaller, but more gaps. So we have body close below the line, gap to the next line, goes and hits it. Body close below the line, gap to the next line, goes and hits it. Body close below this line, gap to the next line, goes and hits it. Body close below this line, gap to the next line, goes and hits it. Body close below this line, gap to the next line, goes and hits it. So this time we get 5 signals, and before we had 4 signals. 1 extra signal because smaller gaps. Nicely done. Now on this day here, we will now, on this day here, use the previous day's box, move the cross, and I will not draw current day's box here. We're just going to use the previous day's box. Immediately when the market opens, on the previous day's box, we have a body close below this line, gap to the next line, only with the previous day's box. So gap to the next line, enter, reverses, 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 goes back down, reverses, reverses, reverses. We take an SL here, take the SL, enter our layer, goes back up, comes back down, and this looks like a crash. Let's have a look. So let's do this again. So body close, enter here. Sorry, enter here. Reverse. 150 pip SL here. And actually, there's a wick here. So the 150 pip SL here, this blue candle here for the hour creates a wick below as well. So this itself would activate the SL and give the 50 pip recovery as well. So the same signal activates and gives the recovery. Now, also, just before this is done, we also have here price go up, comes back down and creates another body close signal down here. Can you see? So body close signal down here, enter on this next candle, goes and hits TP. This one hits SL, gives us the recovery. This one activates and gives us a gap, which gets perfectly hit, goes back up, and day finishes, no further gap, no further down. And that's our bearish boxes. Nicely done. Now, just before we take questions and wrap up, I wanted to confirm something for you guys, which is going to help on tomorrow's session, but I wanted to clarify here. When we have a body close below a line, we are looking for gap to the next line. So whenever we have a body close, gap, body close, gap, body close, gap, body close gap. What do I mean by wick rejection? Wick rejection is when we have no body close, but just wick. So when there's no body close on a line and we just see a wick close, that's what we call a wick rejection. Because a body close, what does it do? Body close gives us confirmation for a continuation. So remember that. Body close gives us confirmation for a continuation. Wick rejections, on the other hand, give us rejections, meaning there's no continuation in that direction. If anything, we are going to see a rejection. So wicks on these bullish and bearish boxes confirm support and resistance because no body close, and therefore we expect it to reject there. When we see the body close, that gives us the confirmation that there's going to be a breakout and a continuation. And then the strongest form of continuation we get is when we also have EMA 5 cross and lock, because EMA 5 also gives us confirmation of a continuation. So EMA 5 gives us confirmation of a continuation. Candle body close also gives us a confirmation of a continuation, and wicks give us rejections. So wicks give us rejections, body close gives us continuation. Okay, I'll take questions now. Any questions, guys? No questions, or you can type in the question. When we do only buys, we have to draw bearish boxes. I don't understand your question. You have to do bullish and bearish boxes every time. But bullish boxes are for buys, bearish boxes are for sells.
Sorry, Mr. Gold. I do only buys, okay, and I don't want to sell. We have to draw the bearish boxes again. So
Yes,
we have
yes.
to know where we are, where we stand. That's it.
Yes, you have to still draw, even if I, Mr. Gold, only buy. But I still do the bearish boxes. Why? And let me explain why. Because I may imagine I'm driving, and I am driving from my location, London, to Birmingham. So I'm going up. Okay. So in the UK, London and then Birmingham, I have to drive up north, we call it. Now, even though I'm going up, I would still check the traffic for down. Why? Because when we are going up, if there is an accident and I cannot go up, I may have to go backwards and find another route before I can go back up. So the bearish boxes is very important because it is going to give us areas of where it may reverse to. And then it will help us identify how far it's going to reverse so we can re-enter for better entries. Tomorrow, when I show you the milking, then it will make even further sense why you still need the bearish box. But I'm going to cover that tomorrow. But to answer your question today in a simple way, I'm explaining the fact that even though you are going up, it's nice to know how far it may potentially reverse to, because it will help you also manage your risk, knowing by seeing the bearish box, hold on a second, yes, I'm taking a buy, but there's a signal on the sell. Now, if I'm taking a buy and there's a signal on the sell, let's see how big that signal is. And if you see the sell signal as a big signal, then you may go very small on your buy signal because you may get a bigger reversal. But if you see the sell signal is a small signal, then you'll go in your normal size for your buy signal because you know it's not going to reverse much. Make sense?
Absolutely. Another one before I close is how many charts do you use when you're trading? I mean, we have
me-
one for the gold trends, one for the bullish G boxes, one for the bearish G boxes.
So let me explain. So you're going to have your first chart is going to have your range breaker for the buy, range breaker for the sell, G lock for the buy, G lock for the sell. So that's your one chart. Your one chart's going to have G lock and range breaker for up and down. Then you'll have another chart which will only be for your bullish boxes. And then you will have another chart which will only be for your bearish boxes. And then your last chart for the week will be your gold turns.
Perfect. Thank you very much.
No problem. When we enter on entry candle, do we enter immediate upon the previous candle close? Let's say we wait for better entry, but unfortunately the SLA is hit. Does the 150 bits recover works the same? So the entry candle is always after the close. So if here you have a body close below this half line, gap to the next line, that's your entry candle opening. So if that's your entry candle opening, you have to measure the SL from the opening of the entry candle, not from where you enter. From where you enter, you can enter from a better entry. Does not mean your 150 pip SL entry calibration is from where you enter. Absolutely not. The calibration is set up from the entry of the opening candle of the signal. Now, if you have a better entry, then your SL may be smaller at 70, 80 pips and a calibrated bounce from there, because you have to measure the 150 pip SL not from your entry, but from the signal activation opening candle. Make sense? Good. Good questions, guys. Good questions. Next question. Is it possible to trail our trades? That's your personal choice. It's your personal choice if you want to trail. There's nothing to do with the signal. The signal has given you the gap. You've got your TP. If you now want to chase the momentum without any signal gaps, then that's your personal choice. Any other questions? Trailing, there's a post on the channel, how to trail, that has the different ways you can trail. So just read that. Because there's many ways you can trail. And on the pinned messages, if you search on the pinned messages, how to trail, you will see the different options of trailing. Everybody trails in different way because there has to be a flexibility on your trailing stop SL. And there is no fixed trailing stop SL because the market size, volatility, and the range is changing every day. So you can never go by a fixed trailing stop. It has to be based on your appetite, on how much risk you want to take on keeping a trailing stop. And based on that, you make an adjustment. So there is no fixed rules. Absolutely crystal clear lessons today and yesterday. Already seen it in action on market yesterday and today. It provides confidence for sure. So like I said to you guys, I'm not going to do current data now, but when the market's closed by the course ends, I can show you the current data and you will do it yourself as well. But this is the confidence this system gives us. Right now, the entire retail market in gold is absolutely, and excuse my French, shitting their pants. They have no idea what to do. They don't have no idea where gold is going. Gold keeps creeping up and they are pressing sell because they think where else is it going to go? And even if they are taking buys, they don't know where to exit, where to take exits, and it's basically just crazy. But the beauty of these G boxes, if you draw them, you will see even in these high new levels, they are getting respected. They are, look at today's signal, perfect precision signals. So all our signals that I've taught you, these new market conditions, these new all-time highs, they don't scare me at all. I've done it for over 15 years. This is not the only time I caught a trend creating all-time highs. Every time gold created new highs in new territory, rest assured I was in the industry trading. So I've navigated these conditions many times over, very, very familiar with it. And therefore, these G boxes that I'm preparing you level 2 members with will absolutely guide you through it. The final puzzle piece to your puzzle will be Eagle Eye on level 3, which will give you those 500, 600, 700 pip long range signals. And the reason why we do that for level 3 is we expect traders to mature, we expect traders to be more disciplined and have more patience, and then they are more established in the size of accounts, and therefore they want to take bigger signals because they want to enjoy their life with their family, and so they'll enter one big trade for 500 to 1,000 pips and done for the whole month. So they are the Eagle Eye and the Hawk Eye signals, but they cannot be for anyone. They are only invite only for the people who establish a 6-month performance report that they can send me, showing that what they have learned on level 1 and 2, they have followed it well, they have managed their risk, they have kept the discipline, and they've achieved a consistent 6-month profitable report. If you can do that, I will immediately add you to the waiting list and on the Eagle Eye channel. There is an active channel right now on Eagle Eye just for those waiting list members. And then I will put you on that list. And that Eagle Eye, there's several ways it can be delivered. It will actually be delivered live by me. People are going to meet me face to face. So a lot of people will fly into UK in a hotel and they'll meet me, and we'll also do a video link for those who can't fly in and do that. So it is in your interest, if you want to complete the puzzle of your trading career, to respect what I've taught you, value and respect the knowledge, and get yourself in order to perform and give yourself a full 6-month consistency report. And if you do that, then rest assured I can give you that waiting list. Somebody's just left accidentally. Let me just add. Sorry, somebody's left just now. I've just added them. I think Mario left. I don't know what he missed. I was just discussing Eagle Eye and for people to provide a 6-month trading report with consistent profitability, and then I will allow them to get onto the waiting list for Eagle Eye for long range signals. If a candle body close and a gap to the next G level at the same time, we also see a gap to the intraday level that you give daily. Does this mean extra confirmation in the direction? Obviously, if you're getting more than one signal in the same direction, then it's extra confirmation, you know? That's with anything. Anything in what I've taught you, if you get more than one signal in the same direction, obviously it's going to be more stronger, okay? Any other questions? Okay, so don't, like I said to you yesterday, I promised you guys any confusion you have, it's going to get cleared. Don't over confuse yourself. Same again today. Don't over confuse yourself. Don't over complicate yourself. You've done the bearish boxes. Tomorrow, I'm going to combine and do bullish and bearish boxes again. And I'm going to show you how we navigate the day, both with bullish and bearish boxes, regardless of if you're buying only, or if you're selling only, or if you're doing both buys and sells, it doesn't matter. Regardless, I'm going to show you how to use bullish and bearish boxes together. And then I'm going to show you how to milk, and then I'm going to finish up with tips and tricks on prop firms. So rest assured, by tomorrow, I'll fully clear up any doubts. So don't over confuse yourself. Relax for the rest of today. Absorb the knowledge. And like I said, tomorrow we will reconvene again and hammer through everything. So that's it, everyone. Well done again, once again, for listening to me blab on. Be patient. Don't trade the boxes yet, because there is more that I need to fine tune tomorrow for you. So if you want to practice, but don't trade the boxes yet. Okay. Thank you, everyone. Thank you, Alpha. Thank you, EC. Thank you, Michael. Thank you, Mario. Thank you, Dada. Thank you, everyone. Take care, and I'll see you on the market now. Take care, everyone. Bye, everyone.